In this video, I'll be going through Work Together, Problem 15-3, preparing a cash receipts, cash payments, and cash budget. And this is from page 451 of your Century 21 Accounting Textbook, Advanced Edition 11, by Gilbertson Lehman. So credit to them where credit is due. All right, so we are starting with the cash receipts. So a portion of our cash receipts is going to come from the last quarter sales, of course, because some of them were on account. A portion are cash sales this quarter, and a portion are accounts receivable that we'll collect on this quarter, right? Okay, so our book tells us that each quarter cash sales are 15%, collections of accounts receivable from that quarter are 50%, and then from the preceding quarter, it's 34.5%. Uncollectible accounts is 0.5%. So we'll start with the prior year's fourth quarter sales. The book tells us they were $435,000. So we need to round also to the nearest $10. So that's fun. So equals round, parentheses, 435,000 times the 34.5%. Okay, and comma, and then -1 will get us to the tens place, $150,080. Okay, so then what portion in first quarter is from first quarter sales? We have equals, again, a round function, 15% cash, and then plus how much percent accounts receivable? 50. Okay, and then we'll take the combination of that, so we're going to need a second parentheses right here so we can do order of operations. And then that's going to be times our first quarter sales. So we'll have to go back here to Work Together 15-1 to get our first quarter sales, 283,500. And that gets us to, oh, someone forgot the rest of their round function, comma, -1. Now we should have a nice round number, right? 184,280. Okay, so that would be our total cash receipts from sales. We can just equal sum, add anything that's in that column. Sure, I like it. All right, so then they did this one for us. Second quarter's done, 303,540. So then third quarter, we'll have a portion of second quarter sales, right, equals 34.5% times, we'll go back here to our second quarter sales, and we'll have to round it, equals round, just one parenthesis will do, comma, -1, okay. 109,190, and then the 5% or 15% plus 50% would be 65% times the third quarter sales, and we'll have to do our round function on that one as well. Okay, 260,330. So we should just be able to carry this formula across to keep adding. All right, so now a portion of fourth quarter, cash receipts will be from third quarter sales. So we'll do equals 34.5% times the third quarter amount. Okay. And once again, we've got to round that to the tens place by using that round function, 138,170. And then the fourth quarter sales, and then that one is 65% total, times our fourth quarter sales projection here. Okay, and then comma, -1. Okay, 462,850. Perfect. So what other cash receipts do we have? It says we've got a note payable to the bank, And we can find that down here in the first quarter. Maddox will borrow $20,000 on a promissory note. And so we can go ahead and put that under first quarter. So your total cash receipts would be, add those together. Okay, and the rest of these will just be your total from the sales. All right, so now we've got to move on to cash payments. So the first part is cash payments budget from purchases. So our prior year's fourth quarter, our book tells us was $168,000. So we would take a round of $168,000, and this is times cash payments from purchases are 10% cash, accounts payable that quarter 50%, and cash payments from preceding quarter 40%. So this one is preceding quarter, so it's times 40%. And rounding it back now, $67,200. Okay, so your first quarter purchases would be the 10% in cash plus the 50% in accounts payable would be a total of 60%. And that would be times your purchases from first quarter. Back here in 15.1, our purchases for first quarter gets us to $81,060. So then we'll just add these up, and that should be what we can do all the way across. Okay, second quarter was done for us, $147,280. Now third quarter, we'll have some second quarter amount, which was 40% preceding quarter, yep. 40% times purchases from second quarter. And of course, we'll need to round that. Comma, -1. Okay, so 62,160. And then your third quarter amount is a total of 60% times your third quarter purchases. 118,020 gets us to 180,180. And now fourth quarter. So we have a portion that's from the third quarter, which is 40% preceding times our third quarter purchases. Okay. That one came out round without doing anything. And then equals round of 60% times this quarter, fourth quarter. 130,620, so 209,300. So your selling expenses are generally all paid in the month that you incur the expense. So we'll just go equals, and we'll come back to 15-2 to our selling expenses budget. So it's all of your selling expenses except for non-cash items such as depreciation. So we'll subtract both the depreciation off. The rest of these would be cash items. So we'll take that. Now let's check and see if we get 61,720 with our formula. We did. So we probably did it right. Now, same thing on administrative expenses. So equals our administrative expense budget minus the non-cash things such as uncollectible accounts expense is non-cash and depreciation expense office equipment. 24,980, and we'll carry those across. Now we just need to add them up to find our expenses that we would have paid cash for. Okay, federal income tax expense. We were told income tax payments equal the quarterly federal income tax expenses on the budgeted income statement. So we just have to find that amount on our income statement. Our budgeted income tax expense first quarter. We should just be able to carry this across, and we can. fixed asset purchases. We will purchase equipment costing $55,000 for cash, and that was still in the first quarter, so we'll go ahead and put that $55,000 here in the first quarter for a fixed asset purchase. And then cash dividends. In each quarter, dividends of $2,500 will be paid in cash. So we'll go ahead and put that $2,500 in each quarter. Okay. And then promissory note plus interest will be paid in cash, $22,500 in the fourth quarter. Okay. So put that here. We should just be able to add up our total cash payments, or from other anyways, first. So, undo. These here. Okay, so our total cash payments would be from purchases plus operating expenses plus other, $299,600. We'll just carry those amounts across, and that's it for cash payments budget. Scroll just a bit further down and we will do the cash budget. So you can see first quarter what happened. The book gave us $9,500 for January 1st, and then we would add our cash receipts, so $354, $360, that was here, right? And that would give us our cash available when we add those two together. And then we would subtract the cash payments, $299,600, to get us our ending cash balance. So the ending balance for one period is the beginning of the next. So we'll just carry that formula across. Our cash receipts that we would add would be second quarter cash receipts, $303,540. We should just be able to carry that across as well. So our cash available would just be a sum of these two amounts, and that will be the same, minus your cash payments for second quarter, $253,200. So we would subtract now, which by the end of the year, it looks like we're gaining cash, $245,600. So if you have access to an answer key, this is actually $10 off from what the answer key says. Differences in federal income tax expense. I am not going to take time to find that $10 error. So we are going to call that good. We have done the cash budget, which is just sort of a summary of your cash payments and your cash receipts to figure out what are your cash needs going to be. This company is gaining cash throughout the year. So after taking a loan out in the first quarter, they really had no problems. They're making good money. Their cash is improving. So it's looking good for them. If that wasn't the case, then they would need to think about, maybe we need to reduce our expenses, or do we need to do some more short-term borrowing? There's lots of choices that companies have to make. That's the purpose of these budgets, right? To help them make those decisions, to look into the future a little bit. So that's work together 15-3. You can do 15-3 on your own.